I'm Eric Stevens with Netherlands Sewell, and the next company to present is PetroTal. PetroTal is a publicly traded Canadian oil company focused on development, exploitation, and exploration of oil assets in Peru. They are currently the second largest oil producer in Peru, driven by the successful development of the Bretaña oil field in Block 95. Here to share the story is their CEO and president, Manolo Zuniga. Manolo, I'm really looking forward to your presentation, and I'll turn it over to you.
Good afternoon. It's always a pleasure to be back at Enercom. I really enjoyed last year's meeting in Denver. Although it's always nice to be in your own office, not having to travel too far away, especially nowadays during this new world of COVID-19. The picture that you see right now in the presentation is the Bretaña oil field that is located in the middle of the Amazon jungle. Adjacent to us is the Ucayali River, and then across the river is the Pacaya-Samiria Natural Reserve, one of the largest ones in Peru. We're actually very happy that this is a new presentation for us. In this following slide, you see the map of Peru. PetroTal was set up about 2.5 years ago. We became a public company, initially in the Toronto Exchange, and the following year we also listed in the AIM London Exchange. The company was actually set up initially with a market cap of $100 million, and the concept that we told the investors at the time was that we will develop a single oil field in the Bretaña field that you see in the map inside Block 95. And the concept was that we will increase production and reach 20,000 and maintain a plateau for several years, and that the company was being set up to be able to be profitable at even $40, $45. At that time, the investors thought that it was good to have that vision of low oil prices. So I'm sorry for jinxing the entire industry, because that's where we are nowadays. And the results that we've been obtaining proves that at 40, 45, we make money, and at higher prices, we make even more money. The company was actually well set up. We took the assets of Gran Tierra Energy in Peru. At that time, they had 5 blocks. Very quickly, we disposed of 3 of them. We gave them back to the government. For a new company to have 5 blocks didn't make any sense. Of course, we kept Block 95, where you have the Bretaña oil field, and Block 107 that has a potential for light oil, for 40, 45 API gravity, that it could be a perfect complement to what we see in northern Peru. Just to put things in perspective, in Peru, nowadays Peru doesn't produce a lot of crude oil. It does produce gas, it produces condensate, but crude oil does not. This is why now that we produce more than 10,000 barrels of oil per day, we become the second largest producer and the largest one in the jungle of Peru. But to put things in perspective, you see Block 192. That block actually was developed by Oxy in the 70s and 80s, was at that time known as Block 1AB. That's where I actually worked in that block. Block 8 was the Peru block, the state oil company. It was my father, when he was the head of exploration and production, that with 5 wells discovered 5 oil fields. Combined, these two blocks have produced more than 1 billion barrels of oil. About 70% of that from the Vivian formation, the same producing formation that we have in the Bretaña field. So keep in mind the concept of trends. You see the trend. We are producing from the same formations. Vivian is extremely permeable sand, 2, 3, 4 darcies of permeability, supported by a strong aquifer. So we don't have to worry about doing water injections in the future. Sometimes investors ask me about that. No, we have Mother Nature helping with that. Water is our friend. We're gonna end up producing a lot of fluids. So as I tell our investors, we need to build a factory to produce as much fluid and to extract as much of the oil out and maintain a plateau of 10,000 for as long as possible. And 10,000 barrels a day has always been our target, because at that level of production, once all of the capex has been executed, we are going to be free cash flowing for a long time. But we've been very careful on how we executed our plan. We decided to go on a phase approach, and that's why we've been carefully deploying capital. You see on the net debt of $42 million, that's quite a bit on the fact that we have payables. We will show you in slide 18, 19, some of how we use the financing through our contractors to be able to ensure that we minimize the need for fresh equity. But nevertheless, we have been very supported by our investors, and we have raised equity even as recently as May, and that was done because of the pandemic, as you can imagine. Also, something to highlight is that as we developed the field, and very quickly we were able to bring the field back to up to 10,000 barrels of production. Early in the year, before the pandemic, we actually have tripled the value of the company. And that was the premise when we actually raised money the first time. So that's something very important. Of course, Granterra did a good job with us in the sense that when they sold the assets to us, they ensured that we could enjoy the benefit of their tax pools, $300 million, and as well as the value-added tax. We had a pool of about $10 million. All of that has helped us, of course, execute as we have been doing all along. But execution is how we've been known for the last 2.5 years. Our team in Peru, which is led and operated by all Peruvians. We don't have a single expat in Peru. And of course, myself, that I'm based in Houston, I'm Peruvian as well. And our VP of E&P is also Peruvian. So except Doug, that is our CFO, is an adopted Peruvian. But otherwise, it's all Peruvians working here, making sure that this company does what it is doing best, which is to drill and develop, always on budget, on time. And I will show you some of that in the next few slides. If we go to the next slide, you can see, some of the basic strategy. I know that a lot of companies follow this type of a strategy, quickly grow production. We intended to close this year with 20,000 barrels of production. Unfortunately, with the COVID-19, there have been some, and because of that, there have been some unrest in the jungle. We have, for safety reasons, shut production for now, although we expected to have it back on before the end of the month. And the 20,000 mark will happen sometime next year. But all of the wells have performed as we expected. And as such, we've been able to efficiently grow the reserves. So our job at Bretaña is, of course, to upgrade from the probable to the proven, and from the possible to the probable, and so on, as we can grow the company for years to come. But also, another way of growing the company is by high impact exploration. So I have now a couple of extra slides on exploration, which are quite important, I believe. All of these sets the stage for us to be able to grow. Let's go back to, by the way, I'll manage the slides. So all of these sets also the stage for us to grow the company and look. I have always from day one talked about synergistic acquisitions, and that's something that even more relevant today, that we have to shut the field because of social unrest. It maybe increase our footprint. And of course, working in Peru, like any other developing country, you have to have the highest standard of ESG. And I'll show you in a few slides that we, the team, have actually implemented that, and actually we are doing in such a way, trying to empower the local communities. So on the following slide, you can see some of the highlights. Of course, we discussed the growth on reserves, production, but also it's important to mention the attractive fiscal regime that we have in Peru. It's low royalties, which are always very attractive. I always tell the government that's the best way of enticing companies to come and invest, but also a very steady tax rate. The license contracts, which are contract law, have a tax stability clause. So royalties, taxes don't change. That's extremely important to keep in mind. But as we saw in April, when oil price is Brent, and we sell based on Brent plus a discount, it reached $26 on average. We had a positive EBITDA, and we were producing, in April, we produced close to 350,000 barrels, and we had a positive EBITDA. You know, for us, that was proof that indeed we have a low break-even point. And again, carefully deploying the capital. So we have multiple export operations. Of course, that's important if something happens to the pipeline from a technical point of view, and there's social unrest, you are sort of stranded, but it's important to keep in mind that we need to endeavor to be able to market our crude oil. So finally, as I mentioned, the concept of capital efficiency and being careful with the deployment is the phased approach that we took in Bretaña. On the following slide, you get a sense of the history. And something that I would like to highlight, that when we raised initial capital, we told our investors that if they trusted us with that initial capital of 34 million plus the money that even Rentera put in, for a total of $47 million, and we were gonna prove the concept. There was one well that had been drilled by Rentera that never put on production, and there was also one water disposal well. And we told the market, our investors, we will put it on production in less than a year, for less than $25 million, and we will then drill a confirmation well, and if everything worked out okay, we will have to come back to them to raise some additional equity to continue the development of the project. And that's exactly what we did. You know, we actually put that well on production in 5 months. We deployed all of the initial equipment on time, below budget. Instead of 25 million, was less than 20 million. And then we drilled our first well, and we raised additional equity in 2019. And with that, we continued the drilling campaign. Drilling nowadays is some of the longest horizontal wells in Peru, where we are using AICD valves to control the water breakthrough into the wells. And I'm gonna show you some of the type wells. So for the first time, we have enough history to give you an idea of how these wells have been performing, and an idea of the type well. I've been asked that question many, many times. I'm happy that in this presentation, I'll be able to show you that. So we continue to execute flawlessly, exiting the year at more than 10,000 barrels. And that exit rate is always a good guideline of how the company is executing. And so at the beginning of this year, we were valued, as I mentioned, 3 times as much as when we started. But then the pandemic hit us. And then on top of that, we had some of these social issues we're undergoing right now. But when the pandemic hit, it's not that it hit the field. There was some regulation set up by the Peruvian government, which obligated anyone below 60 or with a BMI of more than 30, not more than 60 years old or more than 30 BMI, that could not work either in the office or in the field. So therefore, the Peru, the state company that operates the pipeline, had to shut the pipe. So early May, we had to shut the field. And then working with Peru very carefully, we were able to open up the field again in mid-July. And that's what we had estimated, that we will be able to go back to producing. We had told that to our investors, who were concerned about our ability to bring the wells back online at the same levels as before. And I'm happy to report that we opened the wells, and actually we were at more than 12,000 barrels of production. But again, because of the issues that are encountering in the last 10 days, we have, for safety reason, we have shut the field until everything it becomes back in order with the help of the government. But let me go to the next slide. And the next 3 slides are gonna cover, actually our next 4 slides are gonna cover our commitment to ESG issues. One of the key concepts, or one of the key pillars of being a socially responsible company is the safety of your employees. And we set up probably the most strict COVID-19 protocol. And when we brought the field back again, we again brought in, and we had reduced the staff from the 300 people that we had in April when we were drilling, constructing, and producing, to just 30 people for maintenance. And then by mid-July, we were back at 150 people. So for the last month, not a single positive test on COVID-19 because of the strict protocol. According to the health ministry, ours probably is one of the best, if not the best, in Peru. So I'm very proud of that. But we also, as you can see in the middle picture, we've also taken care of the local clinic on the town of Bretaña, which is adjacent to us, always taking care of our neighbors. So in the next slide, gives you a quick overview of the concept that we follow on ESG. And something that we like to stress a lot is the governance part. Because again, you know, the 4 pillars of social responsibility is your safety of your employees, environment, of course, communities, and ethics. And that's key. And ethics requires proper transparency. And that's something that we have imposed on our teams, of course, vis-a-vis our investors, our board, and then with the local communities. So if we go to the next slide, you will see, you know, how is that we are trying to transmit this to the local communities. And if you hear on any press report about PetroTal not doing anything for the local communities, that's absolutely false, because we have come in from day one with the communities and explained to them what we can do and what we cannot do. And one of the things that we told them from day one was that we were here to fully empower you. And one of the ways to do that is to be sure that the government you know, gives them the proper allocation of what is called in Peru the canon, which is the share of the government take. In the canon in Peru, which becomes basically an overall royalty of all of the taxes and royalties that the government gather, they commit 18.75% of that value to the region of Loreto, where we operate. Unfortunately, the leaders in Loreto, the capital is Iquitos, only deployed 0.34% to Bretaña. And nowadays, we're the largest producer. And there are 3 other producing blocks. And none of those communities around the producing blocks get any of that money. It's only a minimum amount. I've been estimated that since we started producing in mid-2018, about $30 million of canon has been made available to the region of Loreto, and probably about less than $100,000 have gone to Bretaña. And this is why, you know, people protest, especially when you have the COVID-19. And also, but we've been very steadfast, and we will continue to be very steadfast on our approach. So we have worked with them, and we have told them, we will train you to make sure that the government trusts the municipality to manage the money. And we don't only train the municipality, but the leaders of the communities, so they can keep an eye on that. So they can undertake projects in the future that we are sponsoring, but they should do it. You know, but again, they should actually control their destiny. But all of this with full transparency, and we give the example by setting up this concept of the PromoSAC, which allows us to have people from the communities actually checking on a daily basis everything we do in the river, inside the field, where we have a person working in the field, inside the field, sleeping inside the camp, and they report to their own communities. And it's amazing how they actually go through a full engagement and alignment process to see which pictures to show. Yes, they can take pictures in the field, you know, and what to report. So full transparency. So that's how we do things. And if you go to the next slide, you will see, you know, a lot of the other things that most oil companies do, you know, we do them as well, you know, including this dog that was offered by Gran Tierra in the past. Of course, they could never have the chance to put it on. You can see in the top picture, during the dry season, the river level drops more than 20 feet. So for them to bring merchandise up, you know, from the barges to their town was really a struggle. And now you can see a beautiful dog that we have built for them that was opened early in the year. You know, so let's go to the next slide. And now let's, after this introduction, took me about 20 minutes, I'll go into the Bretaña field. And here you can see some of the things that we are highlighting. We have grown the production. This slide is similar to prior slides that we have before. The concept is very simple. We want to have a plateau as long as possible. So the idea of upgrading from 3P to 2P to proven is key for us, because in the 3P case, you can see for how long we can have production beyond 10,000 barrels. And 10,000 again is important because our netbacks are high. And you can see some of the metrics that we have here. Let's go to the next slide. This is always a comparison. Why is that we think that we can go beyond the 2P case is that other fields that have heavy oil have much higher recovery factors. And here you see actually a nice zoom of the map of the ex-Oxy block at the top, and the Yanayacu field, which is part of Block 8, very close to Bretaña, has almost the same API gravity, much higher recovery factors. And the way the wells have been performing always, it guides us to be beyond the 2P case. And then let's go to the next one. Now, something also to keep in mind is that if you look at the Delaware Sur report, they have quite a range on the oil in place numbers. We always guide on the 2P case. Last year, when I presented in Denver, we always tell them, the 2P case. Our numbers are also very close to that range of the 360, 350. So the key concept is, of course, growing the recovery factor, increasing the recovery factor. We started at 12%. We're now at 13.6, the latest I estimated. So we are moving in the right direction. Let's go to the next slide. Now here, finally, we are able to show you some real data. The graph to the left is a type well of all of the 7 oil producing wells in Bretaña. I always like to highlight the one that was drilled by Bretaña, which is in green. It's a horizontal well. And you can see that from cumulative production versus number of days on production, has not performed as well as even the deviated wells and vertical well that we have, or the 3 horizontal wells. Our horizontal wells, you can see that in less than 150 days accumulated 400,000. These are fantastic wells. And the horizontal wells have been set up with AICD valves. And the AICD valves are set up to be able to control the water coming into the wells. And amazingly, the horizontal wells that did not enjoy the benefit of the AICD valves and our deviated wells perform almost the same. If you look at the cum oil versus cum water chart and look at the ones with the AICDs, which allows us, especially while you're recovering the investment of the wells, to minimize OPEX because you're handling less fluid. And that makes a big difference in our economics. So again, we are using technology to drill these long horizontals. We're using new technology to manage the water. So you have a company that is being smart and work very closely with our contractors. Let's go to the next one. And then the other one, I've been asked for this for a long, long time. And this is our type well for the horizontal wells. Now we have some history. And this is on the 2P case, our oil horizontal well that will accumulate about 3.3 million barrels. And you may remember that we have told our investors that we will be able to be economic even at $40. And there you see it, that even at $40, in our wells will have a positive net present value in close to $10 million or so at 40. Now, of course, at 60, they are wonderful. And you look at some of the metrics. I like the recycle ratio, of course, at 50, 60. So that's what everybody wants to see. And so these wells, you recover, and in the graph, you can see the dotted lines. When they cross the 0 axis, that's when they break even on a net present value. based on a corporate basis and less than 500,000 barrels, and they have plenty of oil to recover. Something also important you may see that when this type well reaches about 500 barrels of oil, we have already recovered about 2 million barrels of oil. We have still another million barrels to go. And we have 20 wells producing 500 barrels each, is 10,000 barrels. And we're gonna be at these levels for a long time. And that's what this is telling you. Again, the importance of having that range 8, 9, 10, 11, 12,000, which is where we are right now. We're 11,400. But the idea is, of course, as you've seen in the other chart, is to grow production to 20,000 and beyond if possible. Let's go to the next slide. Some of these slides you have seen before, and I want to highlight something. It's always important to keep in mind that the Bretaña field is a large field, 10,000 acres large. I remember here talking to investors from Texas and telling them that we will develop a 10,000 acres field with 20 wells. They just could not believe it. But it is a large field. You can see the white lines, the dotted lines on the northern part, and those are the two wells, horizontal wells that we intended to drill this year. We're not probably going to drill any of those. If we do drill another well this year, it's going to be the deviated well that we call the 7D. Less expensive, and we have a good correlation for this well, and it should be a very good well, even though it's going to be a deviated well. Let's go to the next slide. And the 7D well that we're going to drill, you can see here, is basically sitting between the BN1 and the BN1XD. Both of them were actually drilled by Grand Care. The BN1 used to be the original water disposal well, but you can see the resistivities. We turned this into an oil producer. It's a powerful well. And our deviated well, is sort of in between. So it's going to be a good producer. Let's go to the next slide. Now here we have shown this picture. This is an updated picture from Bretaña. You can see on the tanks in green, the bottom ones are the two oil storage tanks, the 20,000 barrels each, plus the two on the right-hand side, white tanks, small tanks, those are 5,000 each. Those are our transfer tanks that goes into the barges. We have a total of 50,000 barrels of oil storage on a gross basis. The one that has the silver cap top is our diluent tank. And then the other two are for managing treating the water that needs to be disposed. Again, water is our friend. Right now we have the CPF1 done. We can handle up to 50,000 barrels of water. And the CPF2, we were working on it, but unfortunately we had to stop all of that. And that project, instead of being completed on time, on budget, by the end of this year, is going to be done by mid of next year. So basically, for 6 months, everything's been pushed because of the pandemic. But also, I would like to highlight the small footprint. It's only about 10 acres, hectares. You can see 11 hectares, as you can see in the next to last bullet. So it's a small footprint, well protected, and we keep track of everything that happens inside, and of course, safety number one. Let's go to the next slide. Here we're going to show you the next 4 slides some of the results of what we have been able to accomplish in the last 2 years. And the F&D cost is dropping, of course, as we continue to develop, increase reserve. It looks good. The net present value going up. Keep in mind that this 1.1 billion is based on these 3 averages of Canadian consulting companies that is set up based on TSX rules. But even at current prices, it'll be probably higher than what we had in 2018. 2P reserves growing. We expect to be able to see some upgrade from the 3P to the 2P. But the chart below is the most important one. And it shows you how smartly we have managed our capital deployment. We raised initial capital, as I mentioned earlier, was 47 million. We raised money, capital last year, and we had to go this year because of the COVID-19 situation, another 40. But we have enjoyed the benefit of 42 million of funds from operations and 36 million from our contractors on basically working capital, which allows, you see the 20 million that we have in cash right now. And so we've been extremely smart how we manage our monies. Let's go to the following slide. And then again, making reference to the way we have executed, where production was going up. The chart to the right shows you as we grew production and our funds from operations were almost matching on a quarterly basis the capex that we were deploying. This is why when we raised the capital last year, we told our investors that we didn't expect needing to go back to the market. We always mention that we do need to secure a facility, a credit facility that will allow us to do the hedges. And we're working on that. I promised to our investors, we're working. Doug Urch, our CFO, is here next to me. And we expect to have something hopefully by next month on that regard. Nothing large. We're talking about $25 million or $30 million at the most, because given how efficient we manage our operations, we should be able to do that. But look at some of the comparisons versus others. The company has truly executed well. Let's go to the next slide. This is another important slide because it showcases the capital allocation. About half in drilling, half in facilities. Again, the CPF2 that we're working on now to be completed middle of next year. That'll be the last set of facilities that we will put in. From then on, just some additional water injection disposal pumps, and it's just seeing the future development drilling. On our 3PKs, we talk about 20 oil wells, 4 water disposal. Right now we have 7 oil wells and 1 water disposal. So we are about a third of the way on the actual well count. On facilities where, as I mentioned, CPF2, and we will be good to go. But again, a lot of people, I always ask questions about comparing ourselves to the Permian, not so much in London. And you can see, some of our metrics, they're extremely good. The mid-cycle capital efficiency, is outstanding. Our break-even point, also is outstanding. And all of that allows the company to be able to be sustainable at $40. Let's go to the next slide. And then this is the last one on this, on reviewing the impact of our plans. Just to, in the last corporate presentation that we had on our website was from February. And at that time we were discussing about oil at $60. Of course, now we give you a detailed analysis between 30 and 55. Something to highlight in the table to the right is the differential. We use on average $44, but I'm happy to report that the first export of Bretaña crude oil was actually bought by BP, and it was at a discount differential of $1.39, which showcases that our oil, even though it's $1.19 API gravity, has hardly any sulfur or heavy metals. It's clean oil, and it has a good component with residuals, ideal for refineries like the one that BP bought this oil for. And that gives me the expectation that we could even improve on these netbacks that you see on the right between 30 and $50. But in the last bullet, at $45, we have an EBITDA of $74 million. This is why we have told our investors from day one, this company can make money at $40, $45, even we can drill new wells, as we showed you before. Let's go to the next slide. Let's go to the next one. You guys know about us already, I hope. And here we go to some of the exploration upside. And it's important for us to try to grow the company or either organically, and as I mentioned, maybe we do also some synergistic transactions. But this is the first time that I show you some of the upside on Block 95. And you at the beginning, I mentioned, keep in mind the trends of the discoveries in the ex-Oxy block and the ex-Petroperu block that follow into our block, and you can see the trend. And the size of these volumes are exciting given the proximity to Bretaña. Let's go to the next one. And on the next one, I'm going to highlight the Block 107. And Block 107, geologically, in most of the leads and structures are more, look like Gusiana, like the subthrust type of place. But here in this map, you can see Block 107 has a brand new road connecting it to the central highway of Peru that connects Lima in the coast all the way to Pucallpa. And from Pucallpa, you can take it by river all the way to Iquitos, the oil, or by road to Lima. Let's go to the next one. And here you see, you know, the leads that we have and prospects. Osheki is well known as a prospect, ready to drill, and Constitución as well. The ones to the west of Constitución are the thrust belt type of clay. The Constitución is different. It's actually closer to the Los Angeles field that is located 60 miles north and produces 45 API gravity. You can see the potential that we have in our hands. And Constitución, I think it'll be a perfect target. Why? We have done a complete analysis here. We have evaluated the generation of the crude oil, the migration, and the entrapment. And we see the migration happens from west to east, from left to right. And Osheki is in the middle of a forest reserve. That well is going to cost $40 million. Constitución is adjacent to a brand new road. The well, including setting up the site that will allow us to drill other wells, will cost $20 million. The well probably costs like these ones in Bretaña. For $20 million, if I can find something that is equivalent to Bretaña, but 45 API gravity, it changes the whole thing. And also, it will prove that going west, you will have full of oil. So it's an easy way of doing this. Let's go to the next slide before I run out of time. And here you see a more detail. I've shown this one before, and it shows you the structural map of Constitución, the seismic. Actually, this looks very much like the Xuxufindi field in Ecuador, although on a smaller size. Xuxufindi is close to 1 billion barrels. I don't want to entice people to think like that, but it's the same. And it looks exactly like the one of Los Angeles, just north in a brand new road in Los Angeles. That oil is actually trucked to Pucallpa and then sold by barge to the refinery of Iquitos, where we're selling oil. Let's go to the next slide after the transition. And that's the last one. And just in time to cover the entire story, you know, I hope that I have been impressed upon you the level of execution of the team, the fact that we have the reserve potential and the exploration upside, and the way Bretaña is being developed, keeping our cost structure low, allows us to, you know, take care of these situations that, especially in this year, like the COVID-19 and some of the social issues, and you know, the company is well set up to grow in the future, you know, for years to come. Thank you so much.
Manolo, thank you very much for sharing the PetroTal story with our audience. As always, you're spot on your timing. And if folks have additional questions for you guys, since we ran up to time, I encourage them to meet with you all. But you certainly are doing some amazing work in Peru. You have over the life of your career, and you've continued that here. So thank you for bringing this story here.
Thank you so much.